Hi, welcome to another episode of Detroit Investor TV. My name is Jeremy Burgess, the Detroit market expert from Urban Detroit Wholesalers, and I wanted to take this episode and it's going to be a short one, but it's going to be one of my biggest pet peeves about when investors sell property, and that's when they use Zillow. Zillow.com, if you're not familiar with it, go check it out. And it's not just in Detroit or Michigan. I see people use this all over the country, and for the most part, Zillow's just especially in Michigan and definitely in Detroit, is a pretty shitty tool for figuring out the value of a property, and it's for a couple specific reasons. First of all, when a property is going into foreclosure and it's purchased at the sheriff's sale, so it goes into foreclosure and the day comes, there's actually a sheriff's sale on the courthouse steps, and the bank sends its lawyer's representative and they make a bid. And some banks are smart and they bid less than the loan amount, and that's not really relevant, and I won't explain why they do that. But some are still pretty silly and they'll bid the full amount of the loan. So let's say this was a loan from 2005, right, when the real estate market was really rocking, and the loan amount's $105,000, right? They'll bid the full $105,000. Well, Zillow, in its infinite wisdom, that's a public record, pulls that value. It's a sheriff's sale. It sees sale, and then it throws that number in there. On the reverse, and I get a lot of questions about this. There'll be a property 3 or 4 blocks away that may be sold for something stupid like $5,000. And then other properties in that area sell for significantly more and drops the value of the property much lower, because that was one of the most recent sales. When it goes in, it's kind of creating its little Zillow number on what the property is worth, and you don't know the condition of that property. Zillow sucks, and the numbers, especially in Detroit, are always ridiculously high, or in some cases ridiculously low, depending on where you're investing. And of course, nobody uses the low numbers when they're marketing their property, right? And it's a really misleading way to market and to sell property. And I think a much better way to do it, and I'm not tooting my own horn here, is just to focus on the cash flow and focus on the return, real return, after all expenses, and what you're going to get. And don't use that crappy tool Zillow. If you're relying on Zillow for some sort of value estimate, I would dissuade you from pursuing that course of action. It's not a bad way to get information, and it does have some interesting sales demographics and all that. I like Trulia.com a lot better. It's not any better as far as picking out values of properties, but it is better at trends and where prices are going. It lets you break it down by zip code and by neighborhood. And if you use it as kind of the broadsword tool it is, not for a specific property, but just in general for a market, that makes a lot more sense. And I think Trulia.com has much more powerful tools than Zillow in that respect. But anyway, that's my rant on investors who use inflated Zillow appraisals to sell property. It's a crock of shit. It's not the real value. If you're looking at something, don't expect it to be real value. I would recommend looking at the cash flow. Is it getting the return that you need for your portfolio, that you want for your portfolio, and kind of make your decision based on that. Well, I appreciate your attention. Once again, this is Jeremy Burgess, the Detroit market expert from Urban Detroit Wholesalers, and thanks for watching another episode of Detroit Investor TV. I'll catch you guys next week. Thanks.